All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Today we are going to look at not so much swing trades, but possible long-term holders. These are stocks that we're saying that have been beaten and battered and have not returned to the price of their peers, and they may offer a good opportunity right now. So,
yeah. If you guys enjoy this kind of entertaining stock market content of Two Stupid Guys Trading Stocks, by all means, give us a like and subscribe below. We'd love to have you guys along on this journey. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
Oh, beaten and battered, huh?
Beaten and battered. You do Baba.
Yeah, I think we've hit this one a few times here. See like our other like 6 videos about Alibaba, but certainly like tons of geopolitical risks there, but a company that doesn't really deserve, I think, the current market price. So we'll see what happens. I don't think I'm planning on adding any more at this point in time. I'm up to about 10% of my total invested assets across multiple accounts invested in Alibaba, but so I'm happy with that. It's not the back of the truck for me. I know some people in the comments have said that they completely backed up their truck, but I think I said I still don't think they deserve to be trading for the multiple that they're looking at. A forward PE of 15 on a company that is growing more than 30% a year is like absolutely insane to me. But
yeah, like I said, we won't hit it too much. JD is kind of their biggest competitor, sort of by share. Their PE forward PE is 37, so more than double.
Yeah, absolutely insane.
So in all these charts, the red circle is right before COVID, right? So COVID we had in middle of March. This is right before February, March area. If you'll notice, it dipped down and then it actually went up quite high, 340s, 350s range. We were actually below. We actually hit below the dip of COVID like 14 days ago, as if COVID had just happened again.
I know, right?
Just to put that into perspective.
Yeah. This entire year of like profits for the company is just like completely erased.
I know, which doesn't make any sense. And what doesn't make even more sense is, Vinny, hit the next slide. This is JD.
Yeah.
Okay, so biggest competitor. Honestly, their stock price was so small. The COVID kind of giant crash just looks like a normal ABCD pattern.
Yeah. Yeah, that's pretty impressive. It's just a tiny little dip there and then like off to the races. And obviously they had a pullback, but they're off to the races kind of again.
Yeah, and the pullback is a healthy pullback. It's not like Baba where it's 50% retracement's pretty solid. That's good. That's healthy. Right. Baba's just all of it.
Yeah, exactly. So Las Vegas Sands. We've talked about this a couple of times. So it was in our Vegas trade video. But after looking at enterprise value to EBITDA basis, I determined that they were a pretty reasonable trade. I think I want to say it was about 43% like undervalued at that point in time. And so finally this week I was able to pull the trigger and I opened a poor man's covered call on Las Vegas Sands. So I bought the March 18th, 2022 $40 call for $6.50 a share. And I sold the 10/15 $47 call for 73 cents a share. Basically hoping to keep selling these out of the money calls against my long call, or have like a rapid appreciation in Las Vegas Sands stock, and hitting my short call price. Therefore, I just closed the whole deal out for a nice profit.
So Las Vegas Sands, red COVID. I want you to pay attention to the ending price. Okay. Now, obviously, they did start to recover. Then they went back down to low of COVID lows, and they're starting to come up. They're probably about 15% higher than the COVID low right now. Yeah. And you look at their biggest competitor, and we will link the video above where Vinny actually talked about Las Vegas Sands and Wynn, who's their biggest competitor.
Yeah.
If you go to Wynn, so same thing, COVID low. However, their pullback once again is much more healthy. They're still only at 50% of the COVID drop, not like LVS. And which one had the better cash flow? I can't remember.
That I can't recall. I remember looking at it in terms of like comparison cost of pre-COVID to post-COVID. That LVS was at a better
discount. LVS was at a bigger discount. That's what it was.
Yeah.
So not bad. Tap
Molson Coors. This is kind of funny. This is an interesting one that's kind of evolved over time. So I first got into this trade, kind of following like a Michael Burry trade where I was like, oh yeah, their cash flow is pretty good. They don't deserve to be selling at this multiple. Got in right around $40 a share. Wrote it up to it was like 55 at one point in time, but it's now retraced back down to the mid 40s.
And it hit 60s at one point.
I would say all the way up to 60s at one point. The major driver behind this recent kind of sell-off is that Sam Adams, Boston Beer Company, like kind of like, largest publicly traded supplier of hard seltzer, basically said like, whoa, hard seltzer's done, guys. Like, it's just, we can't even predict what we're going to do for profits this year. We're going to have to write down a bunch of inventory, all this sort of stuff. And like, so they've had a massive sell-off, and other alcoholic companies have been selling off with them. But the difference to me was that Sam Adams was trading at this massive PE. You're looking at a PE here of 20. It was actually even higher than that pre the sell-off.
Pre sell-off, I think it was like almost double, because they had lost half the share of the price.
Over 40. But Molson Coors never really had that exorbitant PE. Yes, their sell-off has been to a smaller degree, but it's still, I think, inappropriate, considering the fact too that also Molson Coors has other product lines. Particularly their Zoa. They're moving to kind of an energy drink environment. They said that in the first like half of 2021, it's actually exceeded their expectations for the whole year so far. I know Dylan tried it, wasn't really a big fan of it, but
I love everything that Dwayne Johnson does. I want to be on record and say that drink sucks. I'm sorry, but it's gross.
Yeah. But then Dylan did do like a nice little groundwork on Topo Chico. The hard seltzer for Molson Coors here was combination with Coke. And, was saying, what was it? Out of 3 barbecues you attended the 4th of July weekend, everyone said that was their favorite hard seltzer.
Yep. I did it in a very nonchalant way. I'd have like a White Claw, and then what a Truly, and then a Topo Chico. I'd be like, oh yeah, this one's way better. I was like, all right. I just didn't say anything. Topo Chico is still huge, at least where I am.
Yeah, interesting.
Yeah. But it was also, if you look at the PE of Tap, it was actually, they had a negative quarter like 2 quarters ago. So technically it wasn't a PE. So we're doing forward PE for this one, but their price is so stupid low. I'll show you right now.
Yeah, they wrote down the value of some of their European assets. That's why they had that negative quarter. I think they were still cash flow positive, but
yeah. So COVID, boom, real low. They did get up to like that 62 range, and they're chilling at about $45, really struggling. In my opinion, especially when you look at the other companies' PEs, and the fact that I feel like Tap has more catalysts. They have more new products that have gotten catchy. Granted, this is beverages. Yeah. What's catchy for a little bit may not be catchy for a longer period of time. In my opinion, Zoa is straight trash. I'll still buy it just because Dwayne Johnson's face was on it. That's fine. But how many times am I going to do that? So go to the next slide. Sam. So Sam has a much smaller float. That's why the price hit like 1,400 from like 200. But they are getting destroyed right now. Yeah. They don't have the same product list though that Tap, because Tap is Molson Coors. What's the beer? I don't.
They have Molson Coors. They have multiple different kind of other brands under that whole umbrella. But yeah,
and then they're in energy drinks and hard seltzers. They're in a bunch of stuff. So
yeah, they have Vizzy, who's kind of like high vitamin C hard seltzer, a little bit of a distinguished product. Topo Chico, the combination with Coke. Go
to another one. I put in Bud in here too. So Bud, look at the pre-COVID. That's also still trending up with it's a pretty healthy pullback. Looks like it's actually probably about to bounce from this level. I was actually thinking about buying more Tap after looking at these graphs.
Yeah, interesting. Yeah, I have 100 shares. I'm not going to sell that until at least after they report quarterly earnings. Then we'll see what happens.
Yeah.
Nordstrom.
So Nordstrom, I'm a big fan of this stock. Do you want to talk about it?
Yeah. So it's actually like interesting. So they had a recent kind of large sell-off after earnings, and the reason why they sold off was
very large.
Yeah, they were still not back to 2019 levels, despite the fact that Macy's and Kohl's both had re-achieved 2019 levels. However, like, the rest of the report was pretty positive. In terms of, this increased full year guidance, they went from 25% revenue growth to 35%. So they upped their revenue guidance by 10%. And then the other thing that I think people are kind of missing on in terms of Nordstrom here is that they're creating a good flywheel in terms of their e-commerce. With now 42% of their sales coming from digital platform. I mean, would you think a company like Nordstrom gets almost half their revenue from e-commerce?
I wouldn't if I didn't know my fiance, because I had no idea that the digital presence Nordstrom had, but also they have what's the off the rack one?
Oh, Nordstrom Rack, yeah.
Yeah, and that's also like massive.
Yeah, the Nordstrom Rack thing too is interesting. I remember reading analysis where they basically value Nordstrom Rack alone at about $5 billion market cap. In comparison, you're looking at the entirety of Nordstrom right now is like a $4.6 billion market cap, meaning that the parent company Nordstrom is valued at basically nothing. Yeah, I thought it was an interesting valuation. The other thing that I think is cool is that they're really working on this e-commerce thing where they're doing 1 day kind of shipping. So they're trying to basically, emulate Amazon's, basically return time and stuff like that in terms of, getting you in that cycle of buying and expectations.
Yeah, I think I really like Nordstrom, especially go to the graph here. This sell-off is kind of disgusting. So they were chilling at $38, $39, $26. They lost 33% of their market cap after that quarter release. 33% of their market cap. I am not buying them yet. I'm waiting for them to put in a pivot point, which is supposed to be, a possible bottom. You're always guessing when you're doing this, but a pivot point makes me feel better. They have not put in a pivot point yet. Actually, they put in another pivot point down 1, 2, 3, 4, 5, 6, 7, 8 days ago. So they're still going down. It's September. I'm thinking maybe October. I might load up on them.
Yeah, it's one to watch right now. I think that's it. Certainly the story doesn't really merit this reaction, at least in my opinion. But we'll see what happens.
This is sorry. This is the weekly. This is going back to like end of 2016. I'm just trying to show that they have been trending down for quite a while. Red is COVID. So they're still not up to previous highs, even though they're kind of making more money. So, and then I have the same for Macy's and Kohl's if you go next. So this is COVID. Macy's has surpassed the COVID fallout. They're actually, if anything, on an uptrend. Go to the next one. This is also when you zoom out to a bigger lens, it's not awesome.
Yeah.
This is Kohl's, also again way higher than COVID. Nordstrom is still half of the COVID drop there, but Kohl's increasing. Kohl's weekly is it's actually a little bit better in my opinion. It looks like they're going up, but I feel like Nordstrom is really undervalued right now.
Yeah, that's interesting. Ooh, Boeing. Yes, yeah, exactly. I thought it was interesting. Did you take a look at the graph there? You agree with the death cross?
I hate that indicator. It's the stupidest indicator.
See our separate video on how it's a useless indicator, but you
use it by not using it. It's crap. It doesn't work. And also, you're about to see in this graph, doesn't work in this graph either, in the one example.
I love it. So definitely some issues, some headwinds, I guess, for Boeing. Pun fully intended there. But in the month of August of 2021 here, we've heard a couple of airlines talking about decreased purchases of airline tickets and kind of dialing back a little bit on like what they saw consumers wanted to spend. So that's definitely has created like a little bit of a negative sentiment towards Boeing because the airlines need to be doing well for Boeing to do well. In terms of the travel demand, there was a survey, I think this was in July of 2021, where they surveyed executives from major airlines and said that they did not expect it to fully recover till 2023, about 52% of them. And another 30% said they actually think it's 2024 is what they're targeting now for a full recovery of airline travel. And they had a couple of recent negative, news stories in terms of sales. So Ryanair, major European kind of discount airline, walked away from negotiations with them. Ryanair, I think it was last December, purchased or agreed to purchase 100 737 MAX airplanes. This recent transaction, they just walked away, saying that Boeing was being unreasonable with pricing. Boeing recently, in the month of August, also lost out an airline order from Delta for 30 Airbus planes. So yeah,
Isn't Airbus booked out forever?
yeah, but both, like, Ryanair actually basically said it too, is that they can extend their current fleet for at least till 2025, they think, but without purchasing any new planes. But in order to be able to have like a little bit of purchasing power with Boeing.
Got it. So pre-COVID, sitting around 340, 350, massive drop, obviously. This is one where I didn't have any cash. And I'm like, oh my God, $80 for Boeing? Are you kidding me right now? And I didn't have any money, unfortunately.
I think Philip Brown talked about being able to buy it for less than just the because they have a military jet like kind of division. He said basically when he was able to buy it for less than the cost of that business, the value of that business alone, which was obviously pretty recession proof.
Yeah. Jeez. Yeah. And so they're sitting around 210. If you're talking about death cross, the bigger dash line is the 50, and the solid line is the gray is the 200. Mm-hmm. So technically, you were supposed to buy in December of 2020, which means you would have made zero money this whole time, and now you're supposed to sell as it just crossed or is about to cross in probably 2 days. Mm-hmm. So yeah, that's a great indicator. That's crap.
Yeah, exactly. Very useful. Oh, Intel. This is near and dear to my heart. Every time I looked at it again today, and I'm just thinking, like, man, like if I had more cash available right now, like Intel is kind of hard to pass up. You eliminate like the kind of geopolitical risk of like Alibaba, although Alibaba I think is a great deal. But Intel, man, the PE of 12, it's insane. Absolutely.
Me and Vinny disagree on this. I think Intel's crap.
Yeah, I know you do. But Intel gets it too. The share buybacks, and then even from the chart analysis standpoint, I was looking at it. It looks like there's a couple of gaps to fill. Maybe, I don't know. You're more the chart guy than I am, so we'll see what you say. And AMD threat's definitely real. But like if you actually watch our video about Taiwan versus China, and think any of that's potential threat at all, right? Taiwan Semiconductors is certainly going to be a company like at risk in something like that. I don't think it's going to happen, but I'm just telling you, like, there's some geopolitical risks there for AMD that may or may not be perceived.
Yeah, I don't think it's perceived at all. I think Intel's crap. Here is red is the COVID circle. They're chilling at $53. It looks like they're still downtrending to me. The reason why I don't like them is because a lot of these drops aren't because of sales. It's because of, in my opinion, Vinny and I greatly disagree on this. We have a whole video on us yelling at each other.
Yeah.
It's because of management and just the worst execution possible. It's like if you put a baby in charge of Intel, and then just every quarter it's like, oh yeah, all the stuff we promised you, not even close. Put it back. That's just every single quarter,
right?
Yes, they do. Yeah. And what did he do for the first 2 quarters?
He pushed everything back.
There we go. Pushed everything back. And granted, I'm going to give him 1 more quarter because he inherited a pile of dog crap that makes a lot of money.
Yeah.
I get it. Go to the next chart for me. You know what's more valuable is the next chart.
Oh, boy.
Oh, my goodness. Oh, man. It's like, who's invested in that, right?
Yeah, I actually made a little money like shorting against AMD here back when it peaked out at like 120.
Yeah, that's fair. I mean,
a bear call spread, but yeah, I mean, I don't know. We'll see what happens. Definitely looked a little extended.
I will say, if you look at the fundamentals and you take out CEO execution, these graphs should probably be switched. However, Intel is still not at its 2000s top. It's .com. I feel like by the time Intel is valued, I'll be dead. So like, why would I invest in it?
That's definitely a distinct possibility. Yeah, it's still not back to the point it was at when Kathy Wood owns it, back in like 1999. Like
the year is 20,065, and now they're the most valuable company for chips. Pointless for me. Like I'm not going to be able to take advantage of that.
Yeah, exactly. All right, guys. Well, let us know what you think about these down below. Like, we're just kind of curious. These are a couple companies that we have our eyes on from a beaten down and battered standpoint. Yeah, what do you think?
Yeah. Have a good one, guys.
See ya.